Welcome to the BizVal podcast. At BizVal, we are passionate about empowering entrepreneurs the world over to understand and unlock the value in their business. We work with advisors and entrepreneurs to demystify the value creation process when building a business. At BizVal, we know how tough it is to grow and run a business, which is exactly why we've made valuations simple to understand, accurate, and affordable. Our unique blend of tech and touch ensures that you always receive the best service, authentic human engagement, and data-led insights to ensure that you build a business that provides you with freedom and choice. In the BizVal podcast, we showcase stories of real entrepreneurs and advisors, sharing lessons and inspiration from their journeys to make your journey just that little bit easier. Joining me today is a man who really needs no introduction. He sat on every side of the deal table, from advisor to buyer to seller, rescuer of distressed firms. He's even spent a stint in corporate, a fairly long stint at that. Rob Goddard, the founder of S Cubed Advisory. Welcome and thanks for joining us here today, Rob.
Well, thank you for that very fulsome introduction. Hopefully I won't let viewers and listeners down, but thank you. Good to catch up with you.
Fantastic. Rob, you've clocked up, I don't know where you stopped counting, but something like 350 transactions across the UK, the UAE, the US over the past 25 years. Can you just give us a sort of 2-minute intro? How did you get here? Just a little bit about your backstory.
Yeah. So first half of my career was working in banking, so corporate life, NatWest Bank in the UK, and rose to the dizzy heights of senior manager. Then I got disillusioned, and I took my wife and my young family at the time to Los Angeles to work in a food ministry, feeding 700 to 800 Hispanics a week. And it was a real boot camp for me, a real sort of getting to grips with what I might want to do later on in my life. Spent a year there, came back, and then worked for a company for a few years, generating sales leads for engineering firms. That was a tough gig, selling to engineering firms. And then I got headhunted by an M&A, or a burgeoning early start M&A business, which is still going today. I took it from 1.5 million turnover to 15 million turnover in 7 years as the general manager. The downside was I wasn't a shareholder. So very well rewarded, but in terms of performance. But I parted company with them and set up my own one-man band consultancy business, but it wasn't through choice. My life took a dive, having reached dizzy heights, commercially and financially. I lost my wife, my family, and my job. So I started from scratch, but decided to keep within business advisory and M&A. And that was in 2008. And many years later, I've had that original business that I started, I exited from 4 years ago. I've bought another business, accountancy firm, as you referred to, did a turnaround, sold that. So I've had 2 exits. I've done 3 MBOs myself, and I've done an acquisition. And I'm still back, because what I love doing with S Cubed Advisory, my main focus, is helping businesses prepare for sale. Because that's what I've learned over all those years in M&A. If you want to sell your business successfully, there's some hard graft ahead for any business owner.
Yeah. I think the sort of dream that gets sold in modern, let's call it social media, and that is, if you're not running a business from a beach in the Bahamas, sipping cocktails and spending 3 minutes a day doing that, and it's a $10 million or pound business and you're doing something wrong, and the reality is a little bit different to that, right?
Absolutely. No, it's hard graft. The rewards are there, but nothing comes in life, does it, without hard work and actually resilience, not giving up.
Yeah. Rob, I mean, you've been very vulnerable in that introduction, and I think, I think we often talk about as entrepreneurs, the sort of shark's teeth of growing a business and entrepreneurship. It's never, even growth is never a linear line. It's these ups and downs, and life happens in between. And it's not just about the business. Um, was there a single moment, through your career or through your life where you kind of said, I'm going to shift what I'm doing? Obviously, your story there, a couple. One, you moved out of corporate and became disillusioned, and then you obviously went through a sort of personal trauma, which also, reshaped some things. But yeah, was there a single moment, or was it sort of gradual series of events that led to you moving to where you are now?
I think there's one fundamental, and I don't mind mentioning it, not least because I did a TEDx talk about it a few months ago and posted the video this morning
Yeah.
on LinkedIn. So I think fundamental thing was I tried to take my own life on top of the Burj Khalifa many years ago. Obviously, unsuccessful attempt, um, but I bounced back from that because I'd been dealing for 2 years with depression as a one-man band consultancy. It was hard, bumping along the bottom, trying to earn a living. I had 4 kids at the time, 4 children to support. So that stress, anxiety got too much one day. So I decided that I wanted to check out of life. And thankfully, the thing that stopped me was a locked fire exit in the Burj Khalifa. So the caretaker not doing their job, thankfully, I'm still here today. So the way I found a way out was actually to contact a friend of mine in the UK, and he flew over. And I think with anyone that may be struggling right now with business, life, whatever it is, the key I found is just to open up to someone you trust. And that's what I did. And I came back to the UK from Dubai and faced my debts, faced my problems, and I managed to get seed investment. A chartered accountancy firm with 14 partners, would you believe?
Wow.
The lead, because I had a 7-year track record in M&A. They wanted to back me to set up a new
Yeah.
business within the accountancy practice, and I'll always be grateful to them. So yeah, we all put money in, and that business grew. And in fact, our next office, we wanted to set up an office in 2016, a second office, and the one I wanted was Dubai. I want to set up in Dubai. I want to go back as someone who failed. I'd failed. I was a broken man out there first time round. So I set up an M&A business in Dubai. Never been to the Middle East prior to that. I'd certainly not operated out of there. And that was a fantastic experience. Is doing the M&A work in another country just gives you a different perspective, doesn't it?
And different cultures and ways of doing business. I mean, I guess as a process driven, I guess Brit by background, right? It must have been quite a culture shock.
Yeah, it was, especially the heat. Yeah, for a limey like me, 55 degrees centigrade outside. What I did learn though is most of the best practices were universal, whether it's the UK or the UAE. And I had worked in the US before in an early days, so it's amazing how much commonality there is. So, I mean, that business I started from scratch, got the seed investment, grew it, set up a second international office. I exited in 2021. So I had my first personal exit, having helped many business owners over the years sell their companies. I was doing it for real for myself. And that is quite sobering because you have all the emotion that's involved with selling something that you started from scratch. And it's like selling a child, I would say. So that was my first exit. With some of the proceeds from the first exit, I bought an accountancy firm that was in insolvency. With a help of my business partner, we turned it around, sold that, flipped it, because we're not accountants.
Yeah.
We're just good at setting up robust practices to help a business become profitable. We're not accountants.
And we're going to dive into that a little bit just now. But I just want to kind of loop back on the past few minutes of discussion. I think
Sure.
what people often don't realize is how how emotionally draining and taxing owning and running a business can be, and you've had a story which I'm sure, is deeply traumatic, but also in some ways deeply inspiring to see, how you've emerged on the other side. And as you say, whether it's a stroke
Yeah.
of luck of a janitor not doing his job properly, we're thankful that you're here today, Rob. But there's many entrepreneurs who carry that sort of silent burden, if you want to call it that. So having somebody who's in your corner and who can support you. I chuckle. I see a lot of like chatter around. Are you an advisor? Are you a consultant? And are you a mentor? And all of these things. It's actually nonsense at the end of the day. Is it? For me, the question is, if you're working with a partner, whether it's an advisor or consultant, is it somebody who's got your back and they're in your corner? And I think that's why, as business partners as well, we both have that ambition to be in the corner of the entrepreneur and make sure they can make the best decisions for themselves, not for the private equity business, not for anyone else, for themselves and their family and whatever they're aiming for. And I think that's what you bring in S Cube is it's you're in the entrepreneur's corner ultimately, and
Yeah.
I think that's so powerful.
I totally, you're spot on, Graham. I often refer to it as we will be in the trenches with you, whatever that thing is. We're in the trenches. We're by your side, and we're here to move you forward.
Absolutely. So let's dive in a bit there, Rob. You know, our listeners keep asking us, so how do I build a business that sort of funds the life I want? How does the business, you know, serve me rather than own me? Uh, where do you start?
I started, and my advice often is to other business owners: design a business with the end in mind. So that involves coming up with a magic number. When you want to achieve that magic number in terms of the value of your business, and what does the structure of your business look like without you? And I
Mm,
did that piece with a mentoring client yesterday. For them, they've got an organogram as to what the business looks like now, a company structure, org chart. I said, well, think about in 5 years or 10 years' time when you're potentially looking to sell, what could the business look like?
mm.
And please make sure that you're not in it. Or maybe perhaps as chairman with a dotted line,
Mm.
but the business is run by others.
It's hard
That's a
to
great
do,
start.
especially in the early days. Sorry to interrupt you.
Well,
When the business gets started, often as the founder, you need to be hands-on, you need to be involved, but there comes a point of transition, I guess, where that shift needs to happen. So you're starting with that end in mind, but then there's something called ego, which often gets in the way as well, right? Is that you need to do this intellectually, you know all these things, and you're like, but I take my identity from this, so maybe just carry on from there a little bit.
yeah, ego often gets in the way. It's part of letting go as well. One of the barriers to selling a business is ego, because the
Mm,
current owner or owners get a sense of identity and purpose in their life. They're used to
mm.
being a legend in their own lunchtime. They make the calls, they make the judgments. People
Yeah.
come into their office or whatever, or on a Zoom call for their sage advice. It feels good to have
Mm.
that. It's quite difficult for many business owners to let go as a result. So, I mean, ego shows up, of course, in the sale transaction as well, particularly when you're
Yeah.
talking numbers and valuation, and when you get a low ball offer from a buyer. It's quite hard not to be emotional. You
Mm.
think, how dare they? They've only known me 5 minutes and they're already devaluing my business. So,
I just came out of a lecture at the moment this morning. I lectured to the Graduate School of Business at UCT, and we do a bit of a case study where we have this fictitious restaurant, and the buyers and the sellers of this restaurant, we put them up against each other, and we just had that notional discussion. Now, the buyers offered 1 million quid, and the sellers wanted 12 million quid, and it was quite entertaining just seeing these two groups going at each other, and both justifying their position, and that happens in the real world, right? But it's people don't necessarily understand that. You as a seller see all the hard work and the graft and everything that's gone into it, whereas the buyer can often be quite
Yeah.
unemotional. It's like,
It,
I've got
it
the money, I want to return.
it's the
Play
baggage.
out every single day.
Yeah, it's baggage. The analogy I use, it's baggage on the part of the seller that they carry with them into a negotiation. Is often people think that selling a business is a financial transaction. I mean, of course it is, but primarily it's an emotional transaction. And certainly for the seller it is, because they've got the blood, sweat, and tears, all that years of history that they carry with them into a negotiating room. And the way that one of the ways that we coach clients, prepare them and mentor them is to say, look, if you can come across that all of this success in the business has come about because of the results of your team. So use the we word, not the I. And come across as almost humble to say, yeah, I know, look, there's things that we don't do, we could do better in this business, but we are turning over £5 million and we're making £1 million on the bottom line. But think what it would be like in your hands, Mr. or Mrs. Buyer, with your greater infrastructure, knowledge, expertise, the larger company. Think what you could do with it. So it's a very different mindset, isn't it? Psychology.
Yeah, it is. I mean, a lot of it's about psychology and that mindset shift. But I want to go back a little bit quickly. You spoke about the magic number. So can you just elaborate? What is the magic number? What do you mean by that?
Yeah, there's often confusion with business owners when I talk about the magic number. They think mistakenly I'm talking about the value of their business, and I'm not.
Yeah.
And nothing could be further from the truth. What it is what is the capital sum that they need in their life at some point in order to finish one chapter and start a new one? That's the magic number. And you can't find it in a P&L. You can't even find it through the BizVal online valuation tool. It's not from a set of accounts. It's their life needs and goals that's important, which is why we always start with the end in mind. What is the life that they're working towards once they've sold up years down the line? So that's the magic number, and it will vary. I always ask the question. I've been doing it for many years. I'm only given one of 4 answers to that question when they realize what I mean. It's either 1 million, 3 million, 5 million, or 10 million, depending on the size of the company. It's never 974,000 pounds. Always the magic million. It's always in round figures, which indicates to me there's no science at all that's gone behind it. It's in their head, which is fine.
And it's sterling, not rupees or or South African rands or something along those lines.
Right? Yeah. Well, I say to them, when they give me a number, I say, is that net or is that gross or net of tax?
As long as it's bigger than the guy in their 4-ball at golf who just sold his business, then that's all that matters, right?
Graham, I've never met, I don't know about you, but I've never met a former business owner that admits to selling on a poor deal. They always had a great deal.
Absolutely. So Rob, I mean, you spoke about the magic number, and I think also, that magic number, as you rightly say, that's not the valuation of the business. Often that's the sort of expectation gap, and that's where you come in and help people say, okay, well, this is, and that's why, I think we both believe valuation is important, not because that's what you can sell for tomorrow. It's because that's where your business is at, and it gives you a roadmap to say, well, how do I get from there to where I need to be, and can I? Because sometimes some businesses simply can't get you from A to B. And then you need to change course or change gears. But can you maybe just move on a little bit from that and talk a little about what are some of the sort of biggest mindset shifts that you see founders struggling with? And also how do they sort of balance their lifestyle goals with the growth expectation or growth expectations of themselves or even investors when it comes to maybe selling their business?
I'll start with the last one first, then it's a major one, isn't it? Is that balance in your life so it doesn't become all dominating. And I'm probably not a good example. I tend to work more hours than I should, even now, even after 2 exits, and I've retired twice technically, but I'm back for a third inning. It's very hard. I think some of the tactics I've used with getting that balance is to have someone close in your life that can keep you accountable. Mine is my wife. She's from Albania, so she's got a Balkan mentality and personality, which means she doesn't take any rubbish from an Englishman. She will. I am allowed to take my laptop on holiday, but I can only access it for 2 hours a day, which I think is quite generous, actually.
As long as it's in the morning when the family and everyone's still sleeping, then you're fine.
Yeah, that's right. So it's very difficult. I've changed from seeing it as 2 pots, personal and business. For me, it's one now. So I have the luxury of being able to choose who I work with, and both in terms of clients and team. And that's a real liberation to choose to take work on or not, as the case may be. So that helps me keep things in balance. And also, there was an old boss of mine when I first started in the M&A side. Steve said to me that I never get too excited with successes, and I never get too down when things are getting really difficult. So keep that midway path. Don't go to the extremes, which I think sounded.
And Brits can tend to be like, my mom's British, my dad's South African. The Brits can tend to be not downers, but I mean, glass half full rather glass half empty rather than glass half full, right? Whereas, we do a lot of work in the US as well. I mean, there it's the opposite. It's like, how many glasses can you fill up, and even then we can sell more. Yes.
Yeah, exactly. And I think, I think also when you go into business with investors, if you're an investor or you've sought external investment, have an open conversation with them about, because investors will invariably look at the exit. Because most investors don't take large salaries or retainers. They make their money on exit. So
Exactly.
It's to have an honest conversation. If you're running a business in conjunct and you've got investors, what does the exit look like? When do you want it? And what is life after sale for you? And with fellow investors, I found that there's a really therapeutic conversation to have. At least there's no surprises from within the board or within the investment of the company. So
I think that's so important is investors don't like surprises. We always talk about it's risk and reward. At the end of the day, I say valuation is quite simple. It's, can you produce repeatable cash profits consistently without you involved in the business ultimately? And surprise and volatility is not great for investors. It's great for day traders who're selling derivatives and options and what have you. But for your typical investor, and that's why the story needs to resonate with the numbers. Anyway, we'll dive into that in a little bit more detail just now. But I think that's such a good point, Rob, is that it's not about playing all your cards or being overly vulnerable. It's about being honest and having those tough, pragmatic conversations early on in a sale process, perhaps.
Yeah, exactly. And now when I invest in businesses, because I do that personally as well, I ask the people who are running the business, what is it that you want? What does success look like for you? Because if you can tick the boxes for the other person, then that has potential to be a really good unison.
Absolutely. Right, move on a little bit. So we've spoken about some of the sort of the fundamentals and some of the sort of perspective on business value. But let's talk a little bit about scaling, okay? Because this is a topical word. Everyone thinks you need to scale a business, and scale often, I think people think it means you need to grow at 300% a year, so you can become the next unicorn. But you've scaled firms both in professional services, tech, manufacturing. And you spoke a little bit earlier about saying even across geographies, there's common principles and that apply whether you're in the UAE, the US, or the UK. Can you maybe talk a little bit on the scaling journey? What does scaling actually mean for you?
Hmm.
And what are some of those sort of universal levers that business owners need to think about when scaling a business?
Yeah. So, I mean, the first thing to say is scaling is not for everyone. And I think it can be overused as a term anyway. If you've got a
Mm.
profitable business with sustainable revenues and you're deriving a good livelihood, there's nothing to say that you need to change that. You
Yeah,
can
yeah.
continue to enhance your offering and customer service, but you don't need to become bigger and better. So that's the first. It isn't an automatic thing. That said, probably the majority of business owners I've ever met do want to grow significantly. And I guess there's two main ways of doing it. One is to grow organically. So that's concerted sales and marketing effort. The other way is by acquisition. And if you buy the right companies and integrate them in the right way, you can accelerate that growth potential or that growth journey pretty significantly. But of course, it does come with a health warning, doesn't it? Because you can inherit all sorts of problems when you absorb another business. And
Yeah.
and the attrition rate is quite high in the UK. Quite a significant number of businesses don't get that have been acquired don't get beyond 3 years post acquisition. And the common reason given is lack of cultural fit. Isn't to do with the numbers, isn't to do with products. It's two workforces not being able to integrate successfully in what a shape or
It's
form.
about people at the end of the day, right?
Yeah, yeah, they're not
And
widgets, are
culture.
they? Yeah, they're not stock. They're not on a set of accounts. They're human beings. So um, th that's what I would say on the scaling side. I mean, clearly to grow, have ambitious growth, then sometimes businesses have to have external funding because there isn't sufficient working capital within the current business to do that.
Yeah.
And of course, that can mean that you can get external funding to go on a buy and build acquisition program if that's what you choose.
Mm-hmm.
But I think growth is healthy, significant growth is healthy, rather than just let circumstances dictate. Be in control of your destiny, but I would advocate that do it with someone who's in the trenches with you. It's always
And I
helpful.
think that absolutely do it with somebody, but I say that word scale, it's like the word success in many ways. I think you need to be intentional about defining what that actually means. Scale for one might be growing at 100% a year for the next 3 years. Scale for somebody else might be, as simple as, can the business operate without me so I can take a 3-week vacation, okay, and not having to stress, and I think sometimes the levers and the drivers are quite similar. Maybe you can just drill down into like what are the sort of 2 or 3 most common sort of things that you would say business owners need to think about, like things in the background that need to be in place for a business to scale. It doesn't matter how you define scale, whether that's rapid growth or just the business not being dependent on you. What are the 3 things that you would
No,
focus on if you engaged a client?
number one, have a plan. 90% of business owners I've met in the last 25 years do not have a formal 3-year, 5-year growth plan. They don't. At best, they have
Yeah.
a 1-year budget because their accountant has told them. So have a plan with milestones, annual and quarterly, as to what you're going to do and what does success look like at those various milestones. So definitely have a plan. Number two, accounts, financial reporting. The majority, not 90%, but the majority of business owners I come across do not have sufficiently robust financial reporting. They just don't. A big clue is when I ask them some basics about the numbers of their business. They say, "Oh, I'm not sure. I'll have to get back to you on that, Rob. I'll speak to my accountant." And I say, "Well, you're running your business. You should know your key numbers. Shouldn't be going to your
Yeah.
accountant. If you go to your accountant, that's going to be historic information. And
Yeah.
when you're running a business, you need the most up to date, don't you, to make strategic.
It's an interesting one that, and I'll get to your third point now, is when we value businesses, we say you don't need your accountant in the room. We ask a set of questions like, what's your annual revenue? What's your annual wage cost? What are you paying yourself? And what are
Yeah,
your cash expenses? And some people will say, but I don't know that. But that's almost a red flag or a bit of a filter itself, because most successful business owners know those kind of numbers in the back of their hand. They may not know whether their turnover is 20.236 million, but they'll know that it's more or less 19 million. They'll
yeah.
know what wage bill they need to make at the end of every month. So I think that's critical. And having good accounting and processes in place makes that easier as your business gets bigger, right?
Yeah, I think that they can once you've got through the early stage of a business and it's generating profit and it's sustainable, you can get complacent. And maybe you
Mm.
didn't look at the numbers accurately, and you feel now you don't need to because you've got a successful business. But that's
Mm-hmm.
irrelevant when you come to sell it one day, because you can bet your
Yeah.
dollar the people on the other side may have a magic circle accountancy firm. Might have Deloitte or EY the other side. They're going to have a forensic deep dive into your
Yeah.
numbers. So yeah, so definitely that's number two, is the whole sort of financial reporting. Apart from making your business more saleable one day, can actually help you run the business and make the right decisions if you're well informed.
Mm.
So that's number two. Number three is systems and processes. When to go from the S of SME to the M of SME, you
Mm.
can't do it in the way that you did it before to get it off the ground. You just can't. You need people around you that are better than you. You need systems, things documented, systems, processes, things that are repeatable, things that make the company more efficient, rather than making errors. So, I mean, that could be all sorts of things. It could be in the way that the human resources side, it could be the operational side if you're into manufacturing. Um,
Mm.
so, and buyers really like an engine that runs smoothly. When they come to look at potentially buying a business, they want to make sure that that engine runs day to day smoothly.
They
Not
want a diesel engine, a profit generating diesel engine, basically.
yeah.
So,
So I mean, those are my top three. There's plenty of others, but I mean, and they're top three because they come up time and time and time again when we're doing preparation. Making,
yeah.
I mean, sometimes our clients won't necessarily want to sell. They just want to make it sale ready. That if they get a contact out of the blue, the interested party doesn't have to wait a year or two.
Yeah, it's that optionality, having the option to sell on your terms rather than being forced to sell because you ill health or you're tired or
Yeah.
whatever. That's absolutely fundamental.
Yeah, agreed.
Yeah,
Or you've just given up because you're tired of it. You've had 30 years doing the same thing. I mean, who wouldn't get bored?
absolutely. I mean, just a question. I know how long is a piece of string, but in terms of that sort of scaling and growing journey, are there any sort of like rule of thumb kind of transition points, going from £1 million business to a 5 million to a 10 million? I know it's different for every business and every industry, but just like broad brushstrokes, where do you think, and what are some of those indicators that you're kind of taking a step up rather than just kind of a little incremental improvement?
Yeah, thank you for that question. You're right. It is a how long's a piece of string. Um, I I see it more like step change. Like Russian steps.
Mm.
Well, not quite there. I'm trying to do it in reverse, but you know what I mean. So you probably have something like 3 years of growth, and then maybe a year or two of consolidation, and then off you go again. 3 years growth.
Mhm.
Um,
Mhm.
so what you're doing is cementing the successes of the business to date, and then building on a
Mhm.
steady platform to make that next launch. So what it isn't is that I I've never seen a business like that. I see plenty with the hockey stick growth curve after when they're trying to sell, when they want to sell their business, and everything will come good once the new owner is installed.
Absolutely. It's only potential.
It's all about potential. So
Yeah.
so I would say Russian steps. And I think it's important for the team as well, the people working in the business, that they don't have year after year after year after year high growth. Because we talk about scale up as business owners as a positive thing. I can tell you, staff don't necessarily think that. What they see is extra work.
Exactly. Yeah.
And pressure and anxiety and time off, and because they're not well. So I think that's the other part of scaling up. We've got to think about the people around us that are going to deliver that growth. How do we position that message to them? Because a lot of human beings, probably the majority, don't take change well. They look at the negative, the English way, to pick up on your glass half empty. As business owners, we're looking at glass half full. We're looking at, bigger business, better business, more profitable, bigger dividends for the owners. But that's not how the team would necessarily see it. So I think that needs careful thinking through.
That's a great point, Rob. I can see we're going to have a follow-up podcast, because I think, we've got so much we can dive into. But I think for today's episode, I want to kind of, maybe deal 2 or 3 more questions and then wrap up. But first thing I want you to myth bust for us is this notion that business owners say, I'll think about selling when I'm ready. Okay. So they have this mindset that they're gonna put their business on a broker site and it's going to sell within 6 weeks. Break that myth for us. What does reality look like?
Oh dear. Look, build it and they will come. They don't.
Yeah.
If you want to sell a business, you got to work at it, or more particularly, get someone on board that's experienced and knowledgeable and can do it for you. I would never advise DIY selling of businesses, but on the part of the current owners, because they've got a business to run, and selling a business is a second job. It ain't easy to sell a business. There's more businesses for sale than there are buyers. Always has been, and I would venture to suggest always will be. There are tactics, and perhaps in another podcast, there are tactics you can use as a seller to increase price and improve terms. So it will never take 6 weeks to sell a business, not unless it's distressed and in insolvency. That will take a few weeks. Typically, I don't know about South Africa or other countries, but for us, 9 to 12 months is a pretty typical time frame. We always say 12 months. You need to have in your head 12 months to allocate. So
that's after the business is sale ready. So, and that process can sometimes take even longer, right? That can take anywhere from 18 to 24 months sometimes to actually get the business in that state.
Oh, easy. That's why at SQ'd we concentrate on the coaching, training, equipping, really, of business owners years before they even get in front of a potential buyer. Because
absolutely.
And when they say, no, I'm not thinking about when I'm ready, they're never ready. Business owners are never ready to sell their business. It hits them hard, I would say. And I've had several hundred go through under my belt. And the vast majority do have second thoughts later in the process, which is quite a worry when you're an M&A advisor, because you've got a success fee that's waiting for completion. Usually it's that they're scared about the unknown. They've built this company and this lifestyle that's pretty predictable. Now they're cashing it in, and what are they going to do? It's like they're looking over the edge of a big black hole. So one of the things we do when we're coaching, mentoring, and equipping business owners is to think about life after sale. So it's all about envisioning. We get them to do a vision board. What does life look like for you, including the magic number? But it's more than the magic number. It's the things in life that you want to do that selling the business will enable you to do. Not necessarily, it may be the money to fund it. It might be just that you have a release of time. Your diary becomes open. Brilliant.
Yeah. Often the money is the enabler. Often it's more than that. And without that, I've seen so many entrepreneurs, 6 months in, they're like, well, I'm bored. And what do? They start another business, so, it's okay, obviously with a few more zeros in their bank account often, but I want to ask one last question before sort of a fun ending off question is, we speak often about choosing the right advisor. S Cubed, you guys have put together a really great team. It's an experienced team of people who've been there, they've been in the trenches and all of that. What questions should an owner be asking before appointing an advisor or sell side team, if you want to call it that? What are the key questions that an owner should be asking?
So, great question. And some of this comes out of our experience of being on the buy side, because we meet sell side brokers and advisors. The first thing to establish is what personal experience have they got? What's their track record in doing deals? How many? What transactions? Where are the case studies? There are too many people that are just doing it as a job in our industry. They've never been a business owner. That doesn't preclude you from doing advisory piece, but it does help. If you've been a business owner and you've sold at least one business, you've gone through that emotional journey, that's real added value for a client, because you understand and you can empathize. So definitely find out their career history, how long they've been doing it. Talk about some of the transactions they've been involved in. You want to make sure that you speak with more than one company. I think that's true of anything, isn't it? You get a few views. One of the things to look out for is an overvaluation, which will be music to your ears, Graham, I know. There are too many third-party advisory firms, business brokers that are overvaluing businesses on purpose. And the reason they're doing that is they're going for the retained work. They want to get paid every month. Whether or not they sell is secondary. They want the retained income, because that's the short-term cash. That's wrong. It should be giving an honest, market-relevant business valuation, which is why we work with your firm, because it gives us a starting point. It isn't an end point, but it gives us a starting point. It's a reality check. So I would look out, to go back to your question, when you're looking for an advisor to help you on that journey, is ask them to value the business. Watch out for the word could. It could be worth $1 gazillion. Well, yeah. The word could. Better to have should than could.
And then we have a saying, I know it's very much aligned to your values, is it's a core part of the way we do business, is we'll tell the client what they need to hear, not what they want to hear. And that's often hard, so sometimes there's also a bit of a red flag if somebody's appointing you as an advisor or whatever, and they're not asking the right questions, right? You're sitting on the other side of the equation. So sometimes you get these red flags going off and you think, actually, do we really want them as a client? So it works both ways, right? The quality of the questions a prospective client asks you is a good indicator, I guess, for you, as should we take them on as a client and can we help them? It's got to be a two-sided equation, right?
Well, we like using your service because it gives an independent, objective view as to value, and it measures it in 3 ways. Gives a valuation range, which is a starting point for a conversation. That's what it is, isn't it? So beware of brokers and advisors saying it's worth 9 million when other people have said it's probably worth 3.5. Don't challenge the 9 million valuation broker, but just say, that's interesting. How did you get to that?
How did you get there?
Because we're only making £500,000. So that's that's 18 years profit. Who would pay a multiple of 18 for my company? I don't understand that.
Absolutely. Rob, I'm going to ask you one last question. I think there's so much gold in this podcast, and I definitely think we're going to have to get you you back on. Maybe when I'm in London in the next month or so, we should do it in person. But um, if you could give every entrepreneur there just sort of one piece of advice or one habit that they should start tomorrow, what would that be?
Oh, definitely empower your team. Give them more responsibility and encourage them. You might have to pay them more, some of them, for that, but that's fine. But upskill your team, because do you know what? Come the day when you want to cash in and retire to Honolulu or wherever it is that you want to go to and sip pina coladas from the beach, the value of your business is in the team, and it's not in you. That means you're going to get a premium price, or should mean you get a premium price.
Yeah, such powerful advice. You know, that owner dependency um, sounds like such a negative. I like the way you frame it, because empower your team is so much more what's the word? Empowering than reduce owner dependence. It's an important reframing as well, you know. So, Rob, you know, I just want to firstly thank you for joining us. I think just to recap on some of the key takeaways, you know, you spoke about, you know, a bit about your personal journey and you know the sort of ups and downs and emotional traumas and resilience. You spoke about that magic number, some of the scaling levers, the preparation and the exit and optionality around that, and also the importance of having someone who you can trust in your corner, who's going to give you independent, objective advice, but delivered with, you know, the right degree of compassion and understanding. I think it's a fine balance. So I think a powerful message for any entrepreneur to take out of this. In closing, can you just share two things? One, any last piece of advice that you want to leave with the listeners, and then finally your contact details. How can somebody get hold of you? How can they reach out to you?
Yeah, I guess to see things in perspective, just thinking about my old boss from years ago, don't get too excited in the highs and too low with the lows. Just keep things in perspective. There are more important things than running a business. There are. I have to say that as a recovering workaholic. There are more important things. Keep your family close to you and your friends, because at the end of the day, businesses come and go, but hopefully your friends and your family, your close friends and family, will stay there for the rest of your lifetime. So invest in those people and spend time with them. Don't let the business crowd it out. I mean, the best way to get hold of me, I've got a LinkedIn profile. I tend to put out regular content. I always link with people, unless, and then sometimes I have to unlink with them if they send me a sales pitch within a second of linking.
You know, there's an automation running there somewhere. And it's just
At the end of the day, I don't, even if they may never be a client of mine in the future, they may know someone that is relevant to what we do. So I'm always happy to link with people on LinkedIn. That's the best way. And then they can get free content as I post it.
Fantastic. So connect with you on LinkedIn, or look S Cubed Advisory website. I think it does pop up first on Google when I do the search. So
Right, yeah,
S
it's
Cubed
.com.
Advisory UK. Exactly.
Yeah, it's scubedadvisory.com.
.com. Correct. Yeah. Rob, wonderful to have you. Have a great rest of the week. And to all our listeners there, I hope you took value out of this, and join us next time as we go deeper into building businesses of value. Thanks, everyone.